Let's welcome in now the management at Raghav Productivity. Raghav Kabra, CEO at Raghav Productivity Enhancers Limited, is now with us. Sir, your revenues have crossed about 100 crore mark in FY22, 150 in FY23. Do you believe such growth would tend to continue?
Yes, definitely. In fact, our new plant is just about to begin. The trials have already started, and the operational commercialization is also scheduled to begin very, very soon. Because of that, in this year and as well as the upcoming years, the revenue forecast is pretty good as far as uh, our company is concerned, as well as the demand forecasts are for our product, which we see in the Indian market as well as the export market where we are supplying is also very nice. There is a lot of new capacities being added up by steel plants, because of which we estimate very good demand from the product.
Very good demand is what you anticipate at this point of time. But Raghav, could you help us understand whether the growth has been largely led by volumes or there is a realization uptick as well? Could you break it down for us?
Yeah, sure. So it's actually a mix of both. So our volumes have also grown considerably, I think above 20% in the last year, as well as a margin improvement, which is primarily rooted because of our increase in exports. So the revenue and the realization that we generate through our export sales is much higher as compared to the domestic market. And because of our complete focus on that, the realization increase is dropping down to the overall margin increase in the company.
Okay, so since you pointed out about exports and how the margin differential is there, could you talk to us about what's the current contribution from exports, what it is likely to go up to, and how's the demand as far as export is concerned?
Yeah, sure. So in terms of the share, it is above 30% of the export sales, and it has grown considerably because in the before 5 years we were less than 1% in export sales. So from there to now we have grown quite a lot, and we continue to expect the growth to be similar in the upcoming years. Specifically now because COVID has gone down, we can travel very easily. Our engineers can travel very easily to various different countries, and because of the trade opening up and the sea freights coming down, our export sales are definitely bound to increase.
Right. In terms of, when the sales tend to increase, when you're doing backward integration, you're doing new capacities, what sort of operating leverage do you expect? At what level beyond you will start to see a very, very high EBITDA per ton?
I believe that the EBITDA per ton increase for us is going to come from the realization part. With the new plant coming up, the new plant is made in such a way that the end product that is going to be produced is going to be significantly higher in quality as compared to our existing one. We are the largest producer of silica ramming mass in the world, primarily down to quality and related to our name, which is Raga Productivity, wherein we increase the productivity of steel plants and foundry plants. What's going to happen is with the new plant, the productivity increase or the end benefit that the end consumer is getting using our product is going to be significantly higher, because of which they're going to give us a much higher realization. And that, again, as I said earlier, is going to give us a benefit in the overall margins. And you can also say that because of the higher technology used in this plant, our overall costing in terms of be it the consumables or be it the overall functioning of the plant is going to be much lower, which is again going to increase our overall margins.
Just in terms of market share, can you just tell us how has it been evolving with this new capacity coming up in the next 5 years? What sort of market share do you target?
So we are probably the only organized player in our industry. It's a very fragmented, very unorganized space. And we are close to right now about 10 to 12% of market share. With a new plant coming up and our capacity is almost scheduled to double, our market share is definitely bound to grow at much higher percentages than what it is right now. As well as I would like to say that the overall demand for our product in terms of the end consumer, which is the steel and foundry plants, their capacities are also growing very, very fast. And there is a lot of new capacities being added within India as well as within the export segments that we operate in. And from there, we believe that the growth momentum is going to come in.
Just a quick word on the margins. You said it's likely to improve from here on, so 30% plus levels, because I think the exit rate for Q4 was 29.3. heading higher to the 30 to 33% mark?
Yeah, I think I would not like to say specific percentages or numbers on that, but but the way is absolutely correct. I would say that.
Before I let you go, wanted to discuss your shareholding pattern as well, because my team is highlighting how over the last couple of quarters we have seen that the stake of the promoters has been coming off, and of course marquee investors like Mr. Kacholia, Mr. Sheth, Mr. Junjunwala, etc. have been picking up stake. Is the promoter likely to dilute the stake further?
No, there is no particular plan for that. I would like to say that we are very lucky to have such marquee and such trusted investors in our company, and they have been very helpful in terms of our growth stake, and their advice is very helpful to us.
Okay, we'll let you go on that note. Thank you so much for joining us and talking to us about the outlook. So the earnings so far has been quite impressive. Marquee investors checking in, but let's see how it goes from here on, because the management is fairly excited about the growth outlook.